as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Joining me on Stockbox today is the CEO of Nostra Terra Oil and Gas, Matt Lofrgran. Hello, Matt.
Hi, Mark.
How are you?
Doing good. Happy to be here.
Yes, good to have you on. We spoke to you towards the end of last year, I think, and of course 2020 not a great year for most people really, but particularly in the oil sector, not looking good, was it?
No, I mean it's it's a tough year for everybody, life in general. But the oil companies, oil industry, boy, they took a beating like nothing else. We were included in that. We had it really hard, and for most companies, it was about survival, trying to survive. You've seen a record number of bankruptcies in the year.
Mm-hmm.
There's still going to be more coming this year. There's still going to be plenty more. But a lot of our peers didn't make it, and it was about fighting through and trying to figure out how to grow during that market, take advantage of it while you can as well, and figure out how to grow. So, we started off pretty bad, but we finished there with some really good results, we feel.
Well, I remember last time we spoke, you were saying about taking advantage of this opportunity and picking up assets that can be profitable at quite a low oil price. What was it, Matt? Just remind me.
Well, there were three kind of main transactions we did throughout the year. One of them, the Pine Mills farm out, where we had somebody who came in and drilled, Cyprus, who farmed in and drilled. That was something where, regardless of oil price, we got a great deal. So it didn't hurt us having a low oil price, and the asset's strong enough that it made sense to drill at a low oil price. Results are way better than expected, and oil's higher. So, but the other two deals, one was buying the Caballos Creek asset. We picked that up at sub $40 oil, and our economics on this. When we ran it, we looked at the acquisition and said, we're going to buy this based off of sub $40 oil, and it makes sense. It makes money below there, and if it gets to 40, we're in great shape. We're looking really good. And here we are now. We're above 50. So that spins off good money. And then another one was our farm in the Permian Basin. We've already got assets that are over there, and it was just about building our position over there. Haven't announced much about that yet, but it is an area that we continue to work on, and we should have some news coming about the Permian as well.
Okay.
So we there's a few things that we did there to figure out how to grow and take advantage of the lower oil prices.
I think I remember you saying that you wanted to be cash flow positive at $30 per barrel. Is that right?
Yeah, that's the target. I mean, So where we're at now, our assets, they make money. Our lifting costs are in the sub 20 to low 20. So call it around $20 a barrel plus or minus. Now the new well that we brought in Pine Mills that we just announced the production on, that one, our lifting costs are going to be in the single digits. We're talking under $10 a barrel. So that's looking really nice. But the lifting costs are in those lower prices. But then your free cash flow or your net cash flow from those assets to go and pay your overheads, we're not there yet to where we're down to 30, but we're getting closer. So, for instance, we just announced that we're cash flow positive today. That's a pretty big deal. Most oil companies, they don't seem to have production for that matter. They're working on other things. And here we are with production, and now we're into a different category of the few that are actually cash flow positive. So where we're at now, we actually turned cash flow positive in December before the new well came on. We've gone through and we've got our accounts updated on that, and where we're at on that is we did that back when oil was below $45 a barrel. And since then, oil has increased further, our production as well as oil price. But with our production increasing further, that means that our break even as a company is dropping below $40. And so as we add more production, then that break even drops further and further to where if oil, heaven forbid, if oil dropped down to $30 a barrel, eventually we'll be break even at those levels also. So we're marching forward. We're getting closer and closer to that. But the key is right now we're cash flow positive as it stands. And that's, keep in mind, I mean, oil prices where they're at, we don't think they're going to go back down there. You never know. You got to be prepared for that. But we're on the recovery path right now, and we're still in a low oil price environment at $50.
Indeed. So you've kind of had, would you say, almost like a double winner with your production rates there, and of course the oil price performance recently.
Yeah. Oh, definitely. Yeah. I mean, the oil price increase is something that, we talked about this earlier, where we put out an RNS about this. The difference of $41 to $45 is, it's that move there is a much bigger move, more important and more impactful for us than the same dollar movement from $61 to $65. So it is a very big move since we've got to that point now.
So tell us then about the pine mills, about the project and the production rates. How pleased are you with them?
Oh, Pine Mills is amazing. It's been really good. So we've got our existing production there. We have a good sized asset that we have 100% working interest, and we were approached by multiple different parties about farming in. We chose one that we felt would be the best one to partner with, and when we did that, they're choosing the locations based off of seismic. They wanted to get higher on the structure. And what we did was we just farmed out a little 80 acres of that to them. And so with that 80 acres, now you're seeing the result of the one well, and we've got 32.5% interest in that one well and the rest of the 80 acres. So any subsequent wells that are getting drilled on that will have our same thing on those wells. It also means that we've proven up reserves, and that's a big deal. I mean, the production is great. It is really good. It adds that cash flow. It adds proven reserves, proven producing reserves. But we've also now other proven locations, so that increases our reserve base as well. And high grades upgrades the reserves. So it's a great result all around, really.
So the fact now that the company is cash flow positive on that project, does that really set you on a real solid path going forward now?
Definitely, yeah. I mean, that's the importance of this here is that there's multiple ways to grow the company, but we obviously want to do the least dilutive way possible, and then we'll do what makes the most sense. And so many companies, you struggle to sit there and pay your overheads. Now you're to the point where every bit that we have can go reinvested into growth, and that's what we're focused on is investing in the growth of the company going forward. So we've got our funding for that. We've got cash from the recent fundraise. We weren't out to raise any money. We were approached. It was an unsolicited offer, and it was done at market price. So we said, yeah, if you want to raise some money at market price, that's great. We've got other places that we can use the money, some things that we've been working on previously, that cash could come in real handy. So it made sense for us to do that, but we've got cash from that. We've got warrants that are in the money, and now we've got the free cash flow that you add to it. And so you've got the free cash flow you can reinvest, and that doesn't include our senior facility either. So we've got a senior facility in the U.S. It's tied to our production. We can use the cash for whatever we want. We can use it for anything, but they give us the cash based off of our production, off of our proven developed producing reserves. So that's again, when you look at the growth, adding the new well, adding the increase in production, that changes your revolving facility to where you've got more cash that you can use from that as well. So it's been a pretty good move here recently for us.
Fantastic. So talking now just about growing the company, what about your other projects that you have in the portfolio? That's the Permian Basin and the Caballos Creek.
Yeah. Caballos Creek is running great. It's been a real steady producer, and keep in mind, I mean, that is the number one fundamental thing for us is make sure you've got that foundation underneath you. And so, a lot of companies are working on all exploration. We've been focused real heavily on production, but picture three different spheres that are overlapping. You've got one that's production, one that's development, and one that's exploration. So different stages, different risk levels, profiles. And we've been focused mostly on that production, but we've had a little bit of development. And so what we'll do from now is we'll go ahead and we'll expand into some of the others, and we'll have a better rounded portfolio in that sense. So there's some of those that are going to be higher risk but much higher reward, and there's going to be some that are going to be high reward, potentially a very high reward with minimal risk, some risk. And then there's going to be more of growing our base, our foundation. So Caballos Creek, going back to that, that's one that's a really solid producer. It makes us money every day. Downtime on it's very minimal, not a lot of storms. The facilities are all in great shape. We've got great people out working in the field. So things like that, the Permian Basin, Pine Mills, those are the foundation, and we'll continue to grow those. Permian Basin, we've got a lot of locations that are proven wells that we can go and drill, or proven locations we can drill new wells, excuse me. So we'll continue to grow in those areas and build that foundation further and further, while there's other opportunities we're working on for the much bigger upside as well.
Great. Okay. Well, it sounds like there's an awful lot going on, Matt. So can the market expect to see regular news flow just as you started off the year?
Yeah, definitely. It's the point where we're at. I can't emphasize enough. When we're at this point now, we can really start lengthening our stride, and it's a big difference for us. And we've been working on this. Where again, during the downturn, it's for a lot of people, it's tough to get out of bed when they know that there's not much they can do. And we're getting out of bed, we're working hard, we're working smart, we're trying to make the right moves, knowing that the downturn was temporary. Everything's cyclical. We feel that it's going to come back, and it has, and we feel it's going to continue to go. But we're not betting anything or planning on anything based off of $60 oil or even $50 oil. We're working on these lower oil prices, and if it moves up higher, great, more cash flow for us. But our investments make sense at these lower oil prices. So here we are, when the downturn hit, we're investing and we're making these moves. We're investing time, we're investing, cash, but we've got plenty of opportunities we've been working on. Some you've seen, the 3 that we mentioned already, and some that haven't been seen yet, where the investment has already occurred. And so, we expect a lot more news flow throughout the year.
Great. Well, thank you very much there, Matt Lofrgran, the CEO of Nostra, Terra Oil and Gas. Thank you very much for your time.
You bet. Thanks for having me, Mark.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.